I'm Jessica Minton for IB Times TV, and I'm joined by Michael Guli from Knight Capital, who's going to weigh in on the latest data released today and how this could impact that GDP number we see on Friday. Michael, thank you for joining me. It's a pleasure to see you again.
Thanks for having me.
Absolutely. So, home resales did edge down in March, but housing starts last week actually jumped. What do you think is more important to analyze and to look at for the housing market recovery?
Oh, I think the housing starts is certainly more important. It's a good indicator of how the segment is growing, where the opportunity lies, and as we see more and more homes being built, it shows that there's an employment or the workforce being put to good use. So I think it's more important for the new home starts.
Also today, the Chicago Fed National Activity Index showed that the moving average in March fell from February, and basically that the U.S. economic growth slowed last month. Do you think this should raise some questions since we are seeing that GDP number on Friday?
I think it certainly should. We've been on such a tear here for the past 6 months to a year that you're starting to wonder: are we slowing down, or do we have more in us? Can we continue to continue our output and go even higher? So yeah, it could be a very damning effect come Friday.
Right, and finally, after seeing that weaker than expected payrolls report earlier this month, and then also the retail sales number, and now some disappointing housing data, do you think this will trickle onto the April data that we do see coming out next month?
Well, I think it very well could. Traditionally, spring things slow down a little bit, going into the summer months when everybody goes on vacation. So it very well could be a litmus test coming this Friday. So we'll see what happens.
Thank you so much for joining me. It was a pleasure to see you again.
You too. Thank you.